that was a little bit of a shock because they were getting going and there were some real swings. I think part of what I do is that sort of psychological side of we do get downs as well as ups, and it's only a loss if you sell. But by doing nothing and actually letting things recover quite quickly, you might think now is how much further is it going to go for the time being.
I am very happy to welcome Philly.
Thank you.
It is wonderful to have you back on. Last time we had a really good conversation about your background, which of course was in wealth management, and then you've gone out yourself and started your own business. And just remind everybody what line you're going down, as well as being on TikTok with that's how we first met. What else does that consist of?
Yes, so it's really still teaching people about investing and getting them empowered to do the investing themselves, but also now thinking about that mindset element as well, and what stories you're telling yourself that might actually hold you back from building wealth. I found most people I'd speak to didn't just want the investing, that there's more around it that you need. And so actually with this coaching piece, you aren't telling someone what to do, you're actually giving them the tools. But it's not just about the knowledge of what to do with your money, it's actually then the mindset element around it as well. We're all telling ourselves narratives all the time, so it's combining the two.
Because I think if you're not at some kind of calm with yourself over your general financial situation, then that's not a great building block to start investing from.
No, absolutely not. And if you are set in a state where you need to stay safe and thinking about that financial security, for most people, they see investing as risky. It's sort of almost like everything's the same. Whereas, you've got completely different levels of risk in different investments. And it's just really getting that message across, making people feel confident that it can be for them, and then the best ways to go about it.
And that's not just women, it is some men as well, isn't it? Yeah. But it does seem to be predominantly the problem and more common in women, perhaps just because of the last 100 years or so.
Well, I mean, we could only get a mortgage and a bank account sort of 50 years ago. It's been so recent that women had any power to even choose what to do with their money. So I think that's still the case in a lot of sort of marketing, and a lot of the language used, it's still quite restricted. So that's why I always try and sort of talk to women as well as men. But when I do help men, it tends to be ones where they come from a background where there was no high earners in the family. And now almost as adults, they don't feel comfortable to ask anyone. It's almost a bit embarrassing. So it's quite a nice. I like that as well, because it's that's mindset, it's knowledge, and so it's interesting as well.
And so, what kind of conversation do you have when you're just starting off with a client? Then maybe we can even do a role play.
Yeah, sure.
Oh, I don't know what I'm signing up for here. Right.
Well, we always start with sort of the things you heard growing up. Mm-hmm. So I might sort of say to you, when you're thinking about money, what do you think it is? Money is, how would you finish that sentence to you? What is money?
Money is, a means to get things in life to make you more comfortable, I would say. So I think of, your general initial payments that go out, bills, and that we've all got. But what on top of that can help you lead a more comfortable life. And that's because my mum and dad both came from council, kind of housing, as many are up in Scotland. And my dad worked up his own accountancy business. And my mother was in nursing and hairdressing. And so, a lot of their income was going towards just bills. Yeah. But then as my dad's business got bigger and bigger, then that luckily allowed my mum to take some time off and bring us up.
Right. So even just hearing that about level of comfort, that's sort of positive language.
Yeah.
But I often will then scan for, is there something, sometimes someone will say a negative word as well as a positive word. So they can almost see the potential for something positive, but perhaps there's also even the idea of comfort is is something, but it's not saying, it's abundant, it's infinite, it's, allowing you to take over the world. Not that you need to take over the world. But it's just looking at what messages you're sending yourself. And actually, if you've experienced that sort of seeing, going from just paying the bills to there being a little bit extra, that's great that you've already seen that sort of slight possibility of what is possible. But yeah, so I'd start off really thinking about, what phrases you hear growing up, what are those narratives you're telling yourself which might potentially limit how you are as an adult with your money, or sometimes there is already an abundance. Like I work with some business owners where they may have come from a background where you're struggling, but they now just are in such a strong position that they think, right, I've just got to make the next large amount, and they just do it, and it's determination, and it's a different mindset. So it's just acknowledging where you are.
It is funny, a lot of my friends and I discuss, looking back to when we were in our mid-20s, that we weren't earning a great amount, but life did seem easier. And now you get to a point in this part of your career when you're meant to be sort of built up your salary or your compensation, but it doesn't seem like there's the headroom that there should be.
Well, that's the classic lifestyle creep, isn't it? It's where you get the pay rise and then things just gradually get more expensive. You're probably not still paying the same rent that you paid when you were 22.
True.
Things have also gone up, in terms of cost, perhaps not as much as the 45% inflation in Turkey. Their interest rates are 45%. And I was speaking to a financial professor last week randomly in the hotel.
Yeah, as you did.
45%. So, she was saying that their salaries are going up to cover those costs, but they're not getting any richer because things have gone up in price. But obviously on a much smaller scale here, things cost more, you ask. But I think it's that lifestyle creep. And also perhaps, you get a mortgage instead of rent. Perhaps you have children and there are childcare costs. There are different things that do add on top. And if you don't get disciplined to start paying yourself first, with your salary increase, can you siphon a bit away so you don't feel the increase of the new salary, so that you can actually start benefiting.
And that's the the kind of thing that you help with, because with the coaching, you can make people aware of what the options are. In fact, we've got a question on the chat here: when's the best time to start a pension for your children? And that is one way of you just squirreling a bit away each month. As well as that, what are the other options? But
that's, I think some people are keen on pensions for children, often because they don't want to put money into the junior ISA because they're scared that the child will get the money at 18 and not be sensible with it. But part of what I do, and I talk to parents a lot to sort of help about how can you actually educate your children up to the age of 18, so that when it gets to 18, they're empowered to maybe spend something on something fun and enjoyable, but actually some of it stays invested and carries on growing. It's why a lot of people used to put money into trusts so that they could get it at 25. They thought they'd be more sensible. But I think, you can put in from when your children were born into a pension. It's just that you probably won't see them enjoy it. By the time they're late 50s, you'd hope that you can help them sort of sooner than that. And that's why I personally put into junior ISAs for my children as opposed to a pension. Maybe I will do that in due course, but I think great to start with a pension early for people, but I think the junior ISA, you can help them sooner.
And straight from 30 days after they're born kind of thing.
I had a client who was an accountant, and when he had his 5th child, it was at the end of March, and we managed to get his junior ISA open. just to get that allowance. But I mean, the fact that it's now 9,000 for children, if you've got a family of 4, 2 adults, 2 children, it's a lot of money you're putting in, which most people in the UK cannot do.
No,
so I think I always say, even if it's a small amount, it can be, and it doesn't have to be regular, actually. I know people do talk about investing regularly, but if you can put even a small amount aside into either the pension or the junior ISA, it has time to grow. So
great. I am on at them here at IG to get that junior ISA as an option for people.
It'd be a good idea.
It's great, isn't it? And then, so we've got past that point then. Okay, I'm earning the salary that would have seemed like a dream when I was in my mid-20s.
Yeah.
But I still don't have the discipline to know when the check comes through, you've paid your bills.
Yeah.
What do I do with that little bit that's left over?
Well, that's where you're thinking about what do you need in the short term that has to stay as cash, medium term, and then long term. So it's really getting clear on what matters to you.
Yeah.
When do you actually want to achieve those things by? And then if there is something that's longer term, could you put that aside to invest? And then that is that regular putting it aside. And if there's 1 month where you pause the direct debit, that's fine. But it's getting it so it's automated and you're not having to think about it.
And it's habit, and it's negotiable, but not unless there's a good reason.
And it's not checking it all the time, because I think that's where you don't do so well.
Yeah.
I think you want to just invest, keep going with it, and check in that it's sort of in line with what you want.
Okay. And generally, do your clients fill up their ISA first of all, and then, after that, are there obvious routes to go down, or is there options?
I think it will definitely depend on the person's individual situation, and I don't give advice on it. I just explore the options for them. But it's definitely thinking about the different diversification, the different tax things. What are they putting into their pension? What's going to optimize their situation?
Yeah.
And then that balance between the money today versus in the future.
Yeah. And then
tax isn't the enemy. I also think that, having money in a general investment account, you're still investing. It still has room to grow. It shouldn't be that you fill up the ISA and then that's it for investing. One of my best clients sort of really celebrates the wins and takes the profit. Sort of almost celebrates the tax, the CGT, and I think that's
right.
He tries to balance it, but now the allowance is so small. But I just think those sorts of things is actually approaching it positively, that this is a winner and we're now trimming it.
Maybe you have to have a discussion about spread betting at some point with one of your clients. Now, what about the cash ISA situation? What's your feeling on that? Because personally, I don't really understand why cash ISAs exist. But yeah.
Well, for some people, if they've got something they know that they've got cash set aside for, and you're either a higher rate or additional rate taxpayer where you've got so little interest you can make before you have to pay tax on it, then the cash ISA can be a nice place to park it. If you're setting money aside for buying a property, that can be tens of thousands. Yeah. Low hundreds, it can be a sort of substantial amount of money that actually now is generating with a 4% interest rate quite a lot of interest. So it can be a temporary place, as in I say temporary, sort of maybe in the 2-year time frame. So I think a stocks and shares ISA is what I use because that's where I'm at my stage at the moment. But I think for some people it's where they want to put their money.
But if a stocks and shares ISA offers interest on the cash,
oh yes,
in that, then
and there's some good rates out there as well with those. So I think if it does get reduced the amount you can put in, there are ways around it. I mean, cash in a stocks and shares ISA is usually there to be deployed, isn't it? But if it can earn interest while it waits, then that could be a good workaround. I do wonder who has been advising the government on this cash ISA thing, because I don't think, I speak to so many people, men and women, who are not investing. And it's not because they're restricted. If they get restricted on the ISA front, that doesn't mean they're going to make them invest. We need to sort of educate on the investing piece.
There needs to be a huge national education on the potential for investing, and
I'm not saying just for the UK. I mean, that would also be. Let's not restrict people.
Let's start with the UK first. Just because
sorry, not for education. I mean for restricting it to just UK investments,
right?
Because they were talking about that as well. Do you remember they talked about that extra 5,000 in UK investments? I just think let's just stick to letting people know what a sort of diversified portfolio looks like. Let's show them actually, yes, that can go down, it can go up, but also what's the risk of not investing, keeping your money as cash.
And then we saw, I assume, 6 weeks ago, 2 months ago, a lot of people would have looked at their investment account and been horrified that suddenly 20% has just disappeared completely. And it's a big number, isn't it? Because there must be a phrase for you always set your expectations on the highest it's been. And you don't think, oh, I've made 25% and 26% in the last 2 years. It's probably about time, it gave some of it back. Then it did give 20% back.
Yeah.
Did any of your clients, oh, I wish I'd sold, I wish I'd moved some of it into cash? Was there much of it?
I think because some of them are newer to investing, that was a little bit of a shock because they were getting going and there were some real swings. But by doing nothing and actually letting things recover quite quickly, you might think now is how much further is it going to go for the time being. But yes, I think part of what I do is that sort of psychological side of we do get downs as well as ups, and it's only a loss if you sell. So it's that crystallizing it that it doesn't look nice when you see it go in the red.
Yeah.
But actually that people are only investing if they're long-term investors, if they can afford to lose it, if it's not needed for something in the short term. And I think with that in mind, it's never a nice feeling to see, but actually they have that information and knowing actually that some people, they can now put more in and see how it grows over time.
That's it. Yeah. Is it about having a little bit of a pot on the side so maybe you don't put everything you can in at once, or even now that we're back up at 6,000, do some of your clients look at alternatives, whether it be a different area, different geography in the world, or maybe...
I'm definitely not a sort of just invest in the S&P 500 person at all, and never have been. I think, with my training as an investment manager, it's always been to look globally, and then also at the different asset classes. So that diversification is key. And I think the alternative space is really interesting. Things like corporate bonds as well, just making sure that it's not just the equities, that you've got a spread, geographically, you've got the currency, and then alternatives, I think.
Yeah. So, and in the course, do you get as far as talking about all those things?
Yes, I like to make sure that people feel empowered to go and set up their own portfolio, and that it's diversified. So we go through looking at, how would you actually build this yourself? What would it look like? Again, not giving advice on it, but I will show different options and explain the risk of it, but also that you are spreading risk by diversifying.
Yeah.
And it's making those things not scary to people. It's quite reassuring and
demystifying.
Totally. And the confidence levels go, every time I've run the course, I've gone from people 1 or 2 out of 10 to about 7 or 8 out of 10. It just in, a matter of weeks. So it's really kind of, I love it because it gets people feeling calm and confident about investing, that it is for them.
And it's primarily women that you coach.
Yeah.
I'm sure you're going to, it's growing all the time, isn't it? You're going to be busier and busier. But certainly if there's anybody watching that feels that somebody in their life might benefit from this, where do they find you?
This is Philly Financial on TikTok, and phillyfinancial.co.uk is my website.
Awesome. And we can have a quick look at the website. There you are. So yeah, why financing coaching on your approach and everything. And you do groups as well as one-on-ones?
Yes, I do. Monday nights. We actually start tonight, 8 till 9 p.m.
Right. That's a brand new course. Brand new
cohort. Yeah, starting tonight.
Is there any places still left?
We've got a few places.
Get my sister on the phone.
So for women earning over 100,000, it's pretty much professional women going up the rungs at work, busy, don't often stop to think about what matters to them, what they're doing with their money, kind of feeling like, have I missed a trick? Quite often they want to check what they're doing is right. Often either have money saved but not working harder than just cash.
Yeah.
And it's that element of being busy, but actually if you can give yourself an hour a week, you're then set up. Basically, we get you feeling so calm and confident that you just know what you can do with your money.
Are you surprised that there isn't the level of education needed and other people like yourself that are actually going out and trying to make a change?
There's just, I think there's so little out there really, that there's a huge need for it. And even though there are more people training to be financial coaches, I guess it's just reach really. If we can get it more in schools, universities.
Yeah.
I'm trying to help with grad schemes as well, just to try and get people as they start working. Most people I speak to in their 30s, 40s, some in their 50s say, I wish I'd known this when I was 20. And you could really get people going sooner, because you don't need to start with very much. That's the thing.
I agree.
You have to try a little bit harder when you're older.
Excellent. Philly, thank you so much once again for joining us.
Thank you so much.
And I look forward to seeing you in the future.
Great, thank you.